Okay, I actually traded this myself, but what I did was I scaled into this. I was shorting and shorting, and what happens is with the S&P is that it goes ahead and it goes up, it goes back down, making people think, okay, now's the real move down. And so this was a good opportunity. You're going to see the actual trade I did with that, and it was a profitable trade because I started going in shorting here, and I shorted back up to this level right here, and I said, okay, if it goes past the 50-period moving average and it starts to cross into this area here, I'm done. And the reason why I was in this trade, and here's a good learning opportunity, is because you see these two bars right here. I've demonstrated that on a nightly basis before, how powerful of a move that can be for a person. When you get that multi-bar consolidation, such as you had right here, that usually, so if it's a down move and you get 2 bars, typically you're going to go ahead and get another move down. So I was actually expecting this to go down to start right here and then go ahead and perhaps work its way down to here and then maybe find some support. Well, what it did was it actually found it didn't even come to this level. It was a fake out, and I was participating in that as a skill and trade. I got in all the way up to about this area right here, and then it came back down, and I got out of the trade with a profit. And that's why the scale-in strategy can work as long as you know what you're doing. What you don't want to do is throw good money after bad. So there's a huge difference there. Like Enron, Enron had all the moving averages and everything was coming down on Enron. So here you are, Enron was falling back here years ago. I'm just using this as an example to illustrate a very real point. Enron was falling and then rallying back up, falling. Okay, but the trend was down. The resistance was above you. So if you were scale-in buying, you were fighting the trend. Okay, so that's what I want to go ahead and point out the difference. The reason for me for this trade, this was a rising 50-period moving average, but the trend for the last several bars had been down, and the 20-period moving average was starting to roll over. That's why I even participated in that trade to the downside, thinking that maybe we're getting some longer-term rollover potentially down to this area. And I was wrong on that, by the way, but I was still right because I made money on the trade. So. And the reason why I did that was because of that scale and strategy. That's why I very seldom ever lose, because I try to go ahead and trade enough with the trend that the scale and strategy will at least allow me to go ahead and get out with a quarter tick, a quarter point or a half point. Ideally at least a point or more. But when I'm trading the size that I trade, it's perfectly fine to do that. So keep in mind that what I'm looking for is not going in buying when the thing keeps moving against you and everything's coming down on you. You want to go ahead and be a buyer if the overall trend is up. So that's why if it fell all the way down to this level, I would have been willing to buy down to this level. And then if it broke the 50-period moving average, then I've lost kind of my final support in that trade. So just understand the difference between scaling in the direction of the trade versus going ahead and buying or adding to a loser where everything's moving against you. Huge difference there. Could everybody just raise their hand real quick and make sure that so that I make sure everybody's kind of understood that concept of buying in. Okay, good. I'm seeing the hand start to get raised there. Go ahead and keep their hand raised just a little bit longer if you would there. I see some of you are raising lower right away. It's just such an important concept of scaling in for the right reasons versus scaling in because you're just adding to a loser. That's something a lot of people did in the stock market back in the early 2000s and lost a lot of money, and I just want to make sure that people don't do that. Okay. All right, looks great. Thank you, everybody. So the next thing I want to do then is go ahead and clear the screen, actually, first of all. And let's go ahead and get back to the...
Robert, can you hear us?
Unmuted.
Hey, Todd, can you hear me?
Robert, we can hear you. Can you hear us?
Robert, Fletch, I'm going to go ahead and text him right now and see if he picks that up.
Can you hear me?
Yes.
Okay. It says that it said that I was muted. I want to make sure you guys could hear me okay.
Yeah, can you hear us?
Okay, yep, I can. Good. Then everybody should be able to hear me then. Sorry about
Wait,
that.
Robert, can you hear? Robert, can you hear us?
Yeah, I can hear
We
you.
were trying to. Yeah, you couldn't hear us before. Go ahead, Todd.
Yeah. I'm sorry, Robert. So you can hear us both now?
I can hear both of you.
Okay, good. For a while there, I think you might have had your speaker off or something muted in because we were going to just interject with a few questions. But we're going to go ahead and hold the questions until the end and then add them to the back end of this session here.
Okay. Well, just so I'm clear, where did you guys leave off then? Where did I leave off?
Basically, when you started the question and answer or answering your questions here, that's when we apparently lost contact with you. So
Answering the
but
question.
everybody's been able to. You've been going down your list of questions.
Yeah.
When you started doing that, that's when you were no longer able to hear Robert or I, but it's okay. Everybody has been able to hear you the whole time.
They've been able to hear me.
Yeah, so it's been no problem. We just haven't been able to communicate, but it's fine now. So
Okay. And if something happens, you can call me on my cell phone or something. If something like that happens, I don't want to lose people.
I was just about ready to text you. So.
Okay.
I had muted you when you stopped there just to get your attention because nothing else seemed to work.
Okay, well, that's what I was going to say. I saw it says you are muted. That's why I actually stopped. So I just want to make sure everybody could hear me and understood what I was saying. I saw a bunch of hands get raised, so I assumed they could hear me. Sorry, everybody, about the technical glitch there, but looks like everybody was able to hear me. So, okay, so Todd, did you say there was a question, or did we want to proceed?
Nothing at this point that we will bring up because there's a lot of good questions, but there are things that you're already hitting on, and we can add them on after you go through your list if there's anything that has been unanswered.
Okay. Yeah, there's a lot to try to cover, so I'm just going to keep going through then. We'll probably have to pick up the pace a little bit, but there's a lot of things I want to get out there for people. So, okay, more importantly, okay, things don't go as planned. What makes you stay in? So we kind of talked about that. When I get out is if the trend has started to turn against me. When I stay in is when I'm willing to continue to scale in is if I'm still on the right side of the trade, the overall trend. Be it whether it's a short-term trend of an hour or so, or whether it's a longer-term trend. In this case, I took that short trade because the overall trend, if you recall, we're still below the 11,700 level on the Dow. So the overall macro trend is still down. We've had the Fed come out and buy everything, and basically, kind of turn us into a little Russia, I think. No disrespect certainly to Russians, but I mean, it's like everything seems to be becoming state-owned, with buying anything that fails. And then we've had the no shorting, in certain things, so to stop the bloodletting. But in the grand scheme of things, those stopgap measures were still below some key levels in the overall market. So you're getting a mini preview to my next upcoming video on YouTube, but you can see that the overall trend is still down. So I still continue to take shorts as a whole, where appropriate. Signs to stay in when price reaches the support and resistance level. Okay. Well, hey Todd, I think you're unmuted. Okay. So the next question I want to go ahead and ask, the answer is when to stay in as price reaches the support and resistance level. And here again, one of the things that I've advocated in the channel before is taking size off as you go ahead and get to the next levels. So if you went ahead and you broke the support level, let me get the highlighter on here for you. If you broke the resistance level here and you took the slight pullback to a speed line as your pullback, as kind of a modified trade, then you could look to take some of your initial size off here And then you can go ahead and see if you want to let the rest, let your winner run. Now, in this case, you would have had to have taken a pullback that would have actually gotten you almost back to your entry. In fact, probably slightly below your entry. So you would have taken some heat on that. But you would have locked in some profit, and then you could have gone and said, okay, I'm willing to accept a little bit of a loss below this to give this a chance to continue the overall trend. So what I look to do is usually if we're coming up to another support or resistance level, I'm looking to go ahead and take some profit off the table to try to lock in a gain. How much do you take off? In part that depends on the volatility on the day. That goes ahead and it depends on your risk tolerances. If your psychology is you like to go ahead and cut your winners short and you let your losers run, you may want to take more off the table at that initial level. So in other words, you may want to take 50% off perhaps at this level so that you've locked in some profit and can feel good about that. And that way then you can let it pull back. Now, again, in this case, this pullback actually slightly below your initial entry. But you would have had the initial profit up to here, so you could have taken a little bit more heat to see if it would run. So keep that concept in mind that as I approach a support or resistance level, even I, especially with size, because reversals happen, especially in a market like this. Again, we talked about how well the 1241 area had worked, even in all the madness the other day, the last couple of days. In fact, I think there was a question either in the channel or here earlier this morning or something. I thought there was a question to the effect of, did the levels even work, or does technical analysis even work in the madness of the last couple of days? And here you can clearly see that 1241 level, how well that worked. That support and resistance level, which is basically a technical level, not to mention like the 20-period moving average that was rising. So yeah, I submit that technical analysis still does work. If you're in a parabolic blow-off or something like that, no, rational heads are not necessarily there. But as a whole, the last several days, the market has worked very well. You'll recall, like when I did that webinar the other day, I talked about the downtrending moving average resistance and the key levels that were above us. And sure enough, in fact, let me just get to that day there, because I guess there's a lot of people that are probably in here today that weren't able to participate in the channel. What we're referring to is this day here. I did a little webinar here, and what I talked about was the downtrending 200-period moving average, the downtrending 20-period moving average, as well as key support, or excuse me, key resistance above us. This was making me very nervous that all the pressure was to the downside. And then I talked about, a move, down to another support level, because what we had the 2-bar break, but it was very sloppy. And so I pointed all this out in the webinar that I did, the little instant webinar in the chat room the other day. I think some of you that were there will recall what I'm referring to. And then sure enough, all this pressure, look at this in multiple areas. When we look at a confluence of circumstances, that's it right there. If ever you want to go ahead and do a short trade, it's when you get up to this. You talk about your highest probability trade. Your highest probability trade is when you have so many areas of support or resistance convening on one area. Okay, and so sure enough, shortly after I did that webinar, we actually went and sold down, nicely. So just kind of keep that in mind. There's a couple of nice things to know there, which is the confluence of support or the confluence of resistance, depending on which side of the market you're on. Over here is kind of the same thing. Let me move my cursor. Here, you're in an uptrending market. We pulled back to rising 20-period moving average support on the overall trend, the rising 50-period moving average, and here again, that 1202 to 1204 level, I've been speaking about it for quite some time. It's been in my levels, and you see how many times we were hitting it. We pulled back to it, then we pulled to it here. So, I'm looking for a confluence of support or resistance levels. Let me go ahead and ask questions here. So what tells me to stay in is if I'm on the right side of the trend, in closing there, if I'm on the right side of the trend, the what I want to do is go ahead and look to take some percentage off. But if my psychology is such that I'm very fragile at this time because I recently took a heavy loss, or my husband or my wife is mad at me, or the dog's about to leave me, lock in some of those profits at that next key level, and then go ahead and that way you can see if you can let your winner run. That's kind of how I do it. I look to see if the overall trend is still on my side. Do you have setups for scalping for non-trending days where you just want to make a quick buck or two? Yes, I do. In fact, actually some of the trades you're going to go ahead and look at here in a little bit, excuse me here, were very short-lived trading opportunities. Let's get all the way back over here. One of the trades I took yesterday was a short. What had happened was the market had gone ahead. You're going to see this actual trade. Let's get the little marker here. We'd gone ahead and we'd hit the resistance area again, very similar to where we were when we were lock limit up in early hours. We came back to that area, tested again, and rolled over. And I noticed that the 20-period moving average was starting to roll over as well, and we had two decisive bars down, close, okay, below this moving average and this what was support level. Then I saw we had a retracement back to a declining 20-period moving average. So when this thing started to sell off, I didn't wait for any additional confirmation. I went ahead and I jumped into this trade to the sell side. Okay, so this was it was kind of a scalp trade. There are those days where we are in a support and resistance level. I'm trying to think of the day it was earlier. I believe it was early in the week. We were bouncing between support and resistance level, and as long as I have solid support and rising moving averages below me, I'll look to go ahead and take a quick scalp, and that's why I was encouraging kind of a higher probability type scalp trade. Again, is where you have the support level and the rising moving average together. Even if it's a scalp, that's a great trade. But then also, if you're a position trader, if you're on the right side of the trade, that's that can be an even more fruitful trade for you when you got the longer term moving averages and the shorter term combined with the support level. So these are huge opportunities for you. And I actually tried to go ahead and make a video. When I found the average size that people do, I actually tried to make a video for you guys yesterday using the average size, which you guys said you do, which is about 6 contracts. Some of you said you did 1 to 3. Some of you said you did 10 or more. Most of you, though, when it averaged out, were about 6 trades. So I tried to do a 6 contract trade, which you'll see on my trade statement there. But the video, because I had to move everything to Microsoft Outlook, you guys, I think many of you I'd had email problems with Gmail. Looks like some of your servers don't like emails that come from Gmail. They either put in spam or they don't accept them at all. And so I had to move all my accounts over and I put them all in Outlook. And that kind of became kind of an intensive memory hog. So when I loaded up my screen recording software as well, it went ahead and it kind of puked everything out. So what I'll do is, knowing that now, I'm going to still try to get a couple of videos recorded for you guys, probably just make them available in general terms to people like yourselves that have come to this webinar, if I do something like that. But, we'll kind of demonstrate some of those techniques, both scalping and position trading. So if and when I make those available, I'll let you guys know where we put them on the website so you can see them, okay? All right, next. I need to move this over. Okay. Entries. When is the optimal time? When is optimal time when setup is in view? When setup is complete or a few minutes before it completes its final formation? Okay, I think what was being asked there is like the two-bar setup and the retracement. When do you actually go ahead and execute that trade? I tell you what we'll do. Related to the two-bar breakouts, questions on those to speed this up a little bit, because I know you guys got questions. So it sounds like too. Anything with the two-bar breakout, since I'm going to cover that after the questions here, I'll go ahead and I'll reserve that for after this portion. How big should your stop be as a conservative setup and an aggressive setup? Well, again, what's gonna be key there is how many points are you going for? If you're going like right here, let me get the highlighter back up here. Okay, so we've had the two-bar break here. What did it do? It moved right down to the support level. Okay, how many, but if let's say this was going up, how many points were you looking for? So this was trading at the time around the 1250, 1251 area. Where's the next support level? It was down around the 1248 level. Okay, so you're going for about 3 points. So where should your stop be? Well, it should be 3 points or less, probably for the average trader, up in right this area, which is fine because of the fact that you have a resistance level above you now and downtrending 20-period moving average support. But there's going to be other times where maybe a 5-point stop is appropriate if you're going for 5 points or more. But that's really the problem I have with that though is many traders go and make 1 point. They said they were going for 5 points. They end up getting a point in their direction, and because they've had some losers recently, they lock in that 1 point trade, but they were going for a 5-point loss potentially. You got to make sure that if you're going to go ahead and especially as a new trader. If you're a seasoned trader, you have flexibility. If you've been down these roads, you know what it's like to lose money. You've gone ahead and you're well capitalized. You can take heat. Your psychology is such as you look at this and say, you know what, I make mistakes, but I live to fight the next day. If you have a very solid trader's mindset, then you can go ahead and play with those risk reward levels a little bit. If you go ahead and are very undisciplined and you quickly take your profit, you make a tick or two, but then you let your losers run 3, 4, 5, 10 points, which I would hope nobody would do that, but I've heard the horror stories. So, then you need to go ahead and stick to a tighter stop discipline. And I would say use something like this as your guide. Where is the next support and resistance level? Because if it breaks back above and closes above the support or resistance, or in this case, downtrending resistance, this thing should be falling, and it did, and that's the trade will show. But if it closes back up here, then something's wrong with the trend. Now, if it just gets back up to here and then closes back down, then nothing's wrong. But if it starts closing back up here against your trade, something's definitely wrong. Okay? And real quickly, I know I'm throwing a lot at you, but that's the beauty of the video here. You can replay this over and over and over again. Then you can actually go ahead, and that's why I've opened up that extra chat room for you guys, is because then you guys can talk about this more in that chat room, and to help solidify and strengthen the concepts that you've learned here. Okay, in last week's webinar, the people that were there, they kind of set the path. They voted to have a private chat room for people to be able to talk about the indicators and settings and setups and things like that, because you guys had gone and paid to be here. So that's why we opened up that password protected second room for you guys, and that will strengthen your learning because you'll be able to openly talk amongst your peers, all the people that are here, and there's a lot of people here today. So hopefully those people will start to join that private chat room and talk about things too. And to that point, I know some of you have asked about channel logs. Robert and Todd and I are talking about how we're going to go ahead and do that as far as, like posting a channel log in some place that you guys could get access to it, because I know that some of you, or perhaps many of you, go ahead and have jobs, or you're not able to sit at the computer all day where you can participate in the channel. And if you can't log the channel from your home, We're looking at different ways or different locations where we can maybe, post the daily logs so you can go back and read it so you can still continue your learning process, because this is obviously not something you're going to learn in one webinar. Look how many things we've already been doing this for almost an hour, and I'm only just hitting the beginning of the list. There's so many things to talk about, so many things to say. So I'm trying to throw a lot of them at you as quickly as possible so you can replay this video over and over and then come to that chat room or at least read the transcripts of the chat room to continue your learning, okay, which is something that's very important to me. Going back to the questions here. Okay, the two-bar breakout, so we'll talk about those. Conservative. How do I enter once the trend is underway if I missed an entry or I want to add to a position? Okay, real quickly, great question again. What you do is if you miss your initial entry, you should look for a pullback to a support level or a pullback to resistance level, which will give you more safety, for lack of a better word. It's not a lot of safety, obviously, in trading and investing, unless you're investing in guaranteed interest or CDs. But for what we do, it's a higher probability opportunity to add to a position or to enter a position after the initial missed move once we pull back to a key support or resistance level. Okay. I need to keep my tab here. Let's see here. How do you decide on your exits when a next support is hit using trailing stops, velocity, momentum? How do you decide on your exits? Sorry, guys, I didn't write these, obviously. I'm trying to interpret what people are really referring to. I think we kind of talked about actually above how I decide on the exits. I'll look to see if the trend is my friend still. Maybe I'll exit part of the trade, or if I feel that I've reached a comfortable zone of profit and the profit potential, I'll exit the whole trade. How do you determine the congestion zone or no trading zone, breakout zone for each prior day to start trading day? Okay, I assume what's being meant there is there are those times where I'll mention where an area is likely to be congestive. Let's see if I can quickly find an example for you here. Obviously, this is all live and real-time discussion, so you have to bear with the time it takes to go through things. Well, here's just a quick example. You see an overnight trade, and you notice I refer heavily to overnight trade, both like the next morning in my morning commentary, then at night, from the night before his video or the day after his video, and so on and so forth, because overnight trade is important, and you can kind of see where congestion zones, and just eyeballing this is here. This is about the time of the morning here, 6 o'clock, 6:30 in the morning. I'm usually starting to type out my commentary for you. Sometimes if I got other things going on with my son or so, I don't do it. Start till 7:30 or so. But as I'm typing this, I'm going to be sitting here looking and saying, okay, this is a congestion zone. This is where the trade has been held for the evening. So what I'm going to advise you, and if you go back, I'm sure if you look at my commentary, I'm sure that's what I did that day. I would advise a breakdown, below this kind of level, or a break above this level, because the congestion zone, the trading zone, kind of defined itself. So then that tells me, okay, what we want to do is break above this level to go long, or break down below this level to go sell. And actually, I forgot to turn my little highlighter on for you guys. And you actually can see, we broke down that congestion zone, had a nice sell-off. When we rallied back and retraced all the way into it, where did it get held? The exact area here that we talked about. We didn't get the 2 consecutive bars above here, even right into the close. Of course, the closing bars, you guys know, I don't trade that time zone. That 3:45, 4 o'clock Eastern time, I'm normally saying goodnight to you guys. It's too much Las Vegas for me, especially with the size that I trade. And now maybe you guys can see a little bit more what I'm referring to at that as I show you some of my trading trades I took yesterday and such. With size I trade, it's just not worth it trading those last couple bars. And I would encourage you to look at your risk trading plan. In review of that real quick, you guys know I typically don't like to trade before 3 a.m. Eastern time. I don't like to go ahead and trade the 7:30 news announcements. 8:30 Eastern time, 10 o'clock Eastern time news announcements, the 9:30 opening Eastern time bar. Right there, a few minutes before, a few minutes after are some no-fly zones for me. As a rule, very seldom do I ever break that rule. So it happens, but very seldom. It's just not worth it generally. So keep that in mind. So with this bar here, I didn't even really count it because it wasn't 2 bars and it was at the end of the day. So, but you see that once we got back up here, it held very nicely. So that's how I determine a congestion zone. I kind of look at the night before it's trading, or it could be an intraday congestion zone as well. The same concept can be happening intraday. It doesn't have to be overnight, but as I'm looking into my morning commentary, that's where I'm determining those congestion zones. Or if I'm at night in my YouTube video, if I'm talking about be very careful, there could be very choppy trade between this level and this level. If you look back in the previous couple of days or so, you're likely to see a lot of trading activity between those zones, which was my cue, my tip-off that we could be in for some trouble there. Now, if you're a scalper, then that's actually a good thing, okay? Because then you can be shorting the tops and trying to buy the bottoms for quick little pops, okay? But for somebody who's looking for more of a trend trade, that would not necessarily that's who the caution goes to. I tell you what, let me go ahead and do a quick poll if I can. How many of you in here, if you'd raise your hand, actually are more, because everybody has a different style. I've kind of shared with you a little bit more about my style. How many of you, if you raise your hand, are actually like tick traders? You're trading for 1, 2, or 3 ticks on your trades. That's kind of what you do, and you do a lot of that throughout the day. Could you guys raise your hands?